Morning all and welcome to the market view for Thursday the 20th of March 2014. Starting off with the daily chart, we can see yesterday the market tried to move higher, met with some resistance at 166.51 at the psychological level, and then reversed and moved lower. But this didn't happen until later on in the day when Yellen spoke at the FOMC meeting. So obviously whatever she said was positive for the US dollar, and this saw all of the European currencies and anything that's pegged against the US dollar moving lower, which we'll see in just a moment. So the market's looking fairly weakish. It traded down yesterday to the 165 area, and well within a few pips of the 165 area, and then came off the lows. Bit of strength this morning, but not looking good at the moment. There's still a bit of weakness around, so really it's a case of just trying to measure up where the market could actually move to. Yesterday you can see that the support was actually taken out at 165.82, which has been there for some time, so the market driving through this, so we can remove that as well now. The next downside targets, for those of you that are interested, is going to be, I'll just grab the zero line there. We've got a support here, and of course the major one being down here. So let me just change the vertical zoom there and just get rid of that, and let's have a look, see if we can get some other target areas on here. I'm using a 62-76% retracement, and I'm just looking across to the left for the next low, and I'm going to use that to measure up to the recent high. And now I can see why the market is finding support in this area. So 165.20 is a crucial area, which we can see there. This is taken out, then we can expect the market to move lower. Then we've got the psychological level there at 165. So this is an important area, and if we look at the 30-minute chart, I'll just close the markup there. Let's go to the 30-minute. We can see yesterday we had a trade which I spoke about, that the market would possibly make a move before the economic news, and this is the economic news coming out there. So let me just shift to the recorded trade so you can see precisely what happened during yesterday. So here we can see the market shows the potential buy being filled. We can see the order being filled here, and then the market coming back down to the DP level. I'm just going to pause the video, and you can see there managing to stay above the daily pivot line there, and eventually going on to move higher to offer 32 pips or 30 pips at least before the economic news was released there. So you can see the trade there. We've got this bit of weakness once the order was filled, but finding support at the daily pivot and the previous day's close, which is always a good area, and then the market moving up to offer there 30 pips. So that was yesterday's trade. Let's move back and have a look at what's currently happening in the market. Of course, you know, whether it's 10p or £10 per pip, it was a good solid trade there. So £10 per pip, £300 for a morning's work there. So let's just switch back to the current position and see what's actually happening. So we see when Yellen spoke here, the market plunging down there 100 pips or more, sideways all night, has tried to move higher this morning, has met resistance at the 165.50, which is where the entry price is as well, and see the market reversing there for a small loss. And what I mean by a small loss, again, I spoke about this the other day. I'm just going to expand this out so you can actually see it. I'll just reset the vertical, and let me just do that again. Just spread that out a bit. There we go. We can see there the market filling the order this morning. Then we are met with a red bar. And a way of reducing the initial risk that I've spoken about many times, and I'm going to draw this in for you again, is to use a 50% extension below the red candle. If the market's moving high, you want to see green candles. If they fail, we've got this 165.50 psychological level, and then we end up with the red candle as well to indicate to us not have we only got the resistance in the market, but we've also got this being confirmed with the red candle. and there we've got 165.40, and the entry price, if I just put the trade markup back on, let me just delete those lines off there so that's possible to do. And there you can see the entry price is at 165.50, which the market has been struggling with. And there we have 165.40, the entry price 165.50, a 10 pip loss there as opposed to the 15 by keeping the stop where it was. The market at the moment finding support at yesterday's close, but the weakness that's in the background that we can see from here and also in the daily chart, having taken out the support that we had here, the 165.82, we're now heading down towards the 165.20, which is that 76%. So I'll be looking for the market to find some support there if it's going to bounce back. So a small loss there this morning, but a good day yesterday, 30 odd pips in this run here. And this is not unusual when you have an FOMC meeting or something like that the market finds it very difficult the next day to find its direction. Again, you can see the market now coming off these lows, and if it offers another long, then I will take that one as well. But the key here is just to keep the risk down until the market decides what it wants to do. Let's have a quick look at the news before we conclude, and let's see what we've got. So many interested in the red ones. We've got USA unemployment claims. These are just the weekly jobless figures, so not too important, but still make a bit of a difference. They're out at 12:30. Existing home sales at 2 p.m. Philly Fed Index at 2 p.m. also, obviously the new time slot until we get to British summertime ourselves, so an hour earlier than normal. So that's about it really for this morning. The market is stuck in this sideways range following Yellen's comments yesterday. Let's see how the market finds support. Keep an eye on this area here, 165.20. and a close above 165.50, which we've seen in the daily, in the 30-minute chart, is a bit of an area of resistance at the moment if prices are to move higher. And just in case they do, let me assist you here with putting a few target prices in of where the market could actually stop. So we're looking around 166.15 should the market move higher. We've also got the 166 to take out as well. So depending on how the market interprets what Yellen said yesterday, it may ignore it completely. The dollar may continue to move back to its normal downward trend, and the pound resume back to the upside. And also there's a saying in trading which has been around as long as I've been trading, which is 20 odd years now, is that one economic news item doesn't change an existing trend. So you can get a shakeout and then the market resumes its normal course. So if it's going to move back to the upside after it's absorbed the news, that's where it is likely to go. On the downside, we've already got these figures in here, and then we've got two psychological figures down to the 164.24 area there. Okay, that's it from me. Have a good day. As ever, thank you for your support, and all things being equal, I will see you in tomorrow's market view. And as ever, thanks for watching.